Hi, my name's Rachel. Welcome to MarketEdge.com, your source for unbiased technical stock research. Today, we're going to discuss market posture with the founder of MarketEdge, Mr. V. So, Mr. V, can you tell us about market posture? Why should we as traders be interested in this, and how can we use it to make better trades?
Okie doke. Well, we're looking at the MarketEdge homepage, and over on the right-hand side, you'll see in gigantic letters neutral underneath the market posture. Now, I'll give you a little history of how this happened. We've been tracking the market with 3 market timing models that I invented back in, I think 1981, 82. And we have videos on each one of them. One's the CTI, the other is the momentum index, and the other is the sentiment index. And these are updated every Friday after the close, and they give off a reading, which is either bullish, bearish, or neutral. And that is what we base our market calls on. Now, some years ago, we had a hard time getting this across to people that you want to take a look at all 3, don't just get hung up on one, and that never quite got absorbed. So we invented what we call the market posture. And the market posture does just that. It takes a look at the 3 timing models, the cycles, the momentum, and the sentiment index, and they're weighted in such a way that they'll generate our market posture. And the posture is always, it's either bullish when the majority of the timing models are positive, it's bearish when they're negative, and sometimes it'll be neutral. And that's exactly what we're at right now as of February 13th. So like just about everything with MarketEdge, there's usually a little explanation right next to the indicator or study. And if you click on the little question mark, you'll see basically what I just told you, that the market posture is a combination of the cycles, the momentum, and the sentiment index. And that gives us our market call. Now, we've been doing this in MarketEdge since 1993, which is what, 30 years ago? So when I say we have our market call based on our market posture, obviously, we, unlike most people, will tell you that you can time the market. Now, we're not getting every little swivel or swing. Usually, based on the status of the market posture, we'll get 3 or 4 calls a year, either bullish or bearish. Or like right now, when things are in flux, as they have been for the last couple of weeks since February 13th, we'll be neutral. So to take a look at how this all works, I want to draw your attention to the bottom of the MarketEdge homepage, where we have a free book called The MarketEdge Way that explains just about everything that I always talk about. And if you go to page 8, I believe, you'll start to see an explanation of the various market timing models, the main being the cyclical trend index, CTI, and that shows you exactly how that works. The second is momentum index, which measures the divergence or convergence that's going on in the market at all times between the Dow and 10 different major market indexes. The third is our sentiment index, which takes a look at the excessive bullishness or bearishness of various market indicators. I think there's about 11 or 12 here, and comes up with the number. The fourth is our strength indexes, which gives you a weekly read on whether the market's with us, against us, or out of sync. It's just a very short-term 3 indicators, and we like to use this quite a bit in our commentary. And then there's the market posture. And this explains exactly what I just told you, that market posture is a combination of all 3 of our market timing models coupled with the strength indexes to give our market call. So we got back to the home page. Here is how you get at this every day if you want, in particular every Friday after the close. And I'm going to direct you to what is called our Market Letter Weekly. This comes out Friday night. This is the whole thing in a nutshell. And you get a little recap of what the market did during the week. You get a market outlook based on the technical indicators improving or deteriorating. You get the status of our CTI, cyclical trend index, our momentum index, and our sentiment index. And then last but not least, there's the market posture. As you can see, it spells it out black and white. Based on the status of MarketEdge market timing models, market posture is neutral as of the week ending February 13th. For a closer look of the indicators that make up the timing models, check out the tables located below. And if you're into technical analysis, you can scroll straight down, and there we see them once again, CTI is -4, which is negative. Momentum is 4, which is positive. Sentiment's -4, which is negative. And all the strength indexes, this is as of last Friday now, were positive. And then if you want to really get into it, you want to see what components are in the momentum index. They're all listed, what they are this week, the prior week, and the connotation, whether it's positive, negative, or neutral. Same thing with our sentiment index. So what we're trying to do is take something that's very complicated to a lot of people and make it as simple as we can. And that was why we developed the market posture, to be very simple. It sums up everything. You don't have to know anything about technical analysis to take advantage of the MarketEdge output. And it's either going to be bullish, which means you probably got a favorable market for anywhere from 2 to 3 months. Bearish, which means you've got a negative market set up for the next 2 to 3 months. Or neutral, which usually only lasts about 4 or 5 weeks until things get back in gear. So that's it for the market posture. Rachel, you got anything you want me to add?
Yeah, I do have a question. So when we were filming the Tech Talk on Monday, we discussed that we're currently in a neutral market posture and we wanted to go negative, but there were too many conflicting signals. So David said that we would probably go to a negative or bearish market posture on Friday because we update every Friday as necessary. Is there a hard and fast formula, or is it just sort of this feels bullish, bearish, or neutral?
We try to get it down as simple as we can, but still, you're dealing with a very complex animal here. But if you look in the market letter now, on the weekly market letter, if you look at the market timing models, you can see why. Our cycles are negative, the momentum's positive, sentiment's negative, and all the strength indexes are positive. So if I were to say, Rachel, I have this little game I want to play. Whenever it gets one-sided, we're going to be bullish, or when it gets heavy, the other side, we're going to get bearish. And whenever it's even up on both sides, it's going to be neutral. You'd look at this and you wouldn't have to need a market posture. You'd say, I'll bet any money those guys are neutral. You see how it works?
Mm-hmm.
Usually they're in sync, meaning like if the momentum index was -3 or -4, we'd be bearish. It would be
Mm-hmm.
that simple. Despite the fact that strength indexes are somewhat positive. Again, we're not trying to catch every wiggle. These forecasts, I think the average length of them might be 6 or 7 weeks. Okay. So it's not like we're trying to catch every 100-point day up, 100-point day down. It's more, instead of a bullish or bearish call, I always like to use the term it's favorable or it's unfavorable. And when market's favorable, you want to get in there and buy stocks. When it's unfavorable, you want to protect what you got. And if you're real aggressive, you might want to short some stocks. And that's basically it. We don't want to get any more in depth than that.
That makes sense. I appreciate that. So looking at this right now, you're saying you can't imagine a more neutral connotation here because we've got the two negative indexes, positive momentum and positive strength. So are those three strength indexes sort of weighted as one?
In this regard, yeah.
Yeah. Okay.
I mean, you're looking at this for the first time, so are our viewers. You follow this for 3 or 4 or 5 weeks, you start to really get a feel for it, and you'll see where we're coming from.
You
And
say that
again,
we change it, or it normally lasts the market posture for what, 6, 7 weeks?
yeah. There's only 3 or 4 switches on the market calls a year. So you got 52 weeks. What's that? About 10 weeks each, 11 weeks. That's about right. 2 to 3 months. And there's a track record. One more thing that I could point out to you. If you go underneath the weekly market letter, we also have On the Edge, which is this pretty much the same as the weekly market letter, except it comes out at the end of the month. Same format. What happened the previous month, market outlook. Here's a track record of one of our market timing models, which is the main one. This is our CTI. And you can see what it is. The actual reading is +3. For 213, it went negative. That's what you saw, -3. And it's projected to stay negative for 3 or 4 weeks. Here's the momentum index broken down. Okay. And also the sentiment index, with a couple graphs that show you some of the indicators actually at work to give you a little more confirmation. And here's a performance record for the last 3 or 4 years. of when we thought the market was favorable and what happened, when we thought the market was unfavorable, bearish, and what happened. So when you combine this with the weekly, you'll get a good feel for this very, very quickly. And that's the whole purpose.
Great. Well, I really love being able to come back here into the On the Edge and see how we can compare our past calls with the performance of the market, adding in that context of the weekly to get a deeper understanding of each week's market performance is a really great idea in order to improve our context of the market and make better trades. Is there anything else we should check on regarding market posture or, generally anything you're feeling that you want to share with our viewers before we head out today?
No, that's pretty much it. I can tell you, we've been doing this a long time. I've been doing this for 30, 40 years. We have subscribers dating back to the mid-90s who have been following this like a religion every week. And it really comes in handy to know what's going on inside the market and not just listening to a couple guys on TV's opinion. I mean, this is what's really going on. And, you're not going to be right all the time. Like I say, we get it right about 75% of the time. You have a lot of confidence when you go in there with this in your suitcase when you want to go in and buy some stocks. And the MarketEdge market posture is positive and projected to be positive for the next 2 to 3 months. So that's what it's all about.
That's what it's all about. All right. Thank you so much, V. I think that's it for today. If you have questions for V or anyone on the MarketEdge team, feel free to reach out to us at support@marketedge.com or drop a comment below if you're watching on YouTube. If you'd like to try MarketEdge, your first 2 weeks are free. Just visit marketedge.com to sign up, and we'll see you next time. Thanks so much.